Small businesses are the heartbeat of Africa's economy, yet many struggle to reach markets beyond their local communities. The recent B20 and G20 summit discussions touched on the critical importance of equipping SMEs with innovative tools to trade, scale, and compete across the continent. Joining me to unpack more on this is Luthando Vuba, Executive Head of International Trade at Standard Bank Group. Luthando, thank you so much for joining us. The B20 South Africa's report touched on inclusive trade, showcasing that while SMEs are employing 70% of the continent's workforce, they only account for just around 15% of Africa's exports. What are the challenges, or what's holding these businesses back?
Thank you for that question. So if you look at the landscape of SMEs and operating on cross-border trade, there are several factors that are impacting trade access for SMEs. One is the big one, which is access to information. We find that we look at market access and some of the limiting barriers is SMEs having access to reliable data, right? Consistent data around markets and those insights around, is there demand for my product, or where is the demand for my product? The other factor is the costs of doing the business. So we have very limited infrastructure that enables that, that regional connectivity, and also just how much it costs to be able to export goods. So that's a big inhibitor when it comes to regional trade. In fact, some of the businesses would say to us, it's cheaper for them to send goods to Europe than it is to send to another region, to another country in the region. So that one is a big one. And then the other part is when it comes to SMEs and how they are set up, especially when you look in the rest of the continent, a lot of what we look as informal businesses to us is the way that SMEs are operating on the continent. So when it comes to doing payments, what financial services or institutions require in terms of the bureaucracy that goes with onboarding a business to be banked, and also what's required, collateral to be able to extend lending, those are oftentimes not what SMEs are set up for or would be able to have. Even when it comes to data on them, think about some simple things as KYC, being able to have an address, and those details. If you go to a market, let's say in Tanzania or Nigeria, what you have is this is a market for auto and spare parts, and there's just a number of the store, but that business you'll find is actually turning easily between 15 and 20 million rand, but it doesn't look like it. So there are all these factors that also then impede on how easy financial institutions are able to extend lending to SMEs. And
just looking at unlocking those opportunities, how can SMEs be better integrated into regional value chains?
I think this one is probably the best candidate for what would be a public-private partnership, because there's so much that you rely on public sector for to enable that private sector would then obviously help accelerate or then invest in as well. So I mentioned infrastructure, but depending on government and how it's set up, a lot of those mandates are sitting with the government, who oftentimes having to borrow, and those borrowing costs can be an inhibitor, right? And so there was a lot that was delved into around cost of capital as part of the B20 process, especially coming out of the Finance and Infrastructure Task Force. We looked at different barriers that are there, both internally and externally. When I say externally, like rating agencies that add to the risk premium view that African economies can borrow at. Internally, because when it comes to the level of transparency and access to data about countries, that also affects how then a sovereign is looked at and understood when it comes to those risk grades, and that directly translates to what borrowing cost premium they allocate. To give you a sense, some countries it's as high as 50% of their budget. So what the government budgets to spend, half of that is going to servicing debt costs. So you can see how that directly impedes how much a government can then invest in infrastructure. And in other fronts, private sector can then play a more fervent role in solutioning some of those barriers. One thing that I would highlight is that when it comes to the ease of trade regionally, the EU, 30 years ago, set up to enable this intra-block trade, and why they at the market share that they're at today, which is around 70% of trade of the EU countries is within the bloc. In Africa, that's sitting at 14-15%. is you need to bring the ease when it comes to the processing, but also the availability of the infrastructure. So I touched on the infrastructure point, which on the continent currently you have 80% of the transport and logistics being done on road. That's the most expensive form of logistics. So we need better investment in our ports and rail, because that will significantly bring costs down to be able to move goods. The other piece, and that's a role that private sector can play in, but they need government, development finance institutions, the multilateral development banks to help with de-risking those projects to be able to invest in. So that's what the finance and infrastructure policy recommendations to the G20 dealt a lot with. And then the other part, Khaka, that I want to touch on is when it comes to regional trade, what's required on you as an exporter when it comes to documentation, certificates of origin, and other required compliance documents, they differ by country. And this is what I touched on around the AFCFTA trying to harmonize this, because if I know that my certification of origin process is not different when I'm dealing with Nigeria versus when I'm dealing with Kenya or with Uganda and Zambia, it certainly helps then when you as a business are investing in what you need to have in place to be able to invest and know that it's set up for scale. So that as you grow and you expand to new markets, you're not starting from scratch to then meet the requirements of this market. So I think that's a big inhibitor of just the ease to consider a market and then be able to export to it. And I think all these things are being dealt with in different ways, but to accelerate it, that's where the public and private needs to come together and really prioritize where we're going, infrastructure being a big one. And then secondly, when it comes to the regulatory frameworks, how do we streamline these things, especially with the role the customs plays? And then the other one is the support to the SMEs. It can't just be the banks that are financing, you need additional support, incentive structures that help, the SME sector to be able to participate in trade, regional trade.
You speak about the lack of infrastructure. You're speaking about how expensive it is also for these SMEs. Is a Pan-African payment system an option to actually reduce those costs and allow businesses to be competitive in these markets?
Certainly. I think something that brings lesser reliance on hard currency for trade would be a big boost for SMEs particularly. If you look at what the Pan-African Payment Settlement System, which is one of the initiatives of the AFCFTA is trying to do, is address exactly that, where, instead of having to take your rands to convert to dollars to pay your Kenyan counterpart who's sending you coffee, you can pay them in rands and they get paid in Kenyan shillings. I think that would definitely unlock quite a bit of what is adding to the costliness of doing trade.
Luthando, thank you so much for joining us, and thank you for those valuable insights.
Thank you very much.
That was Luthando Vuba, Executive Head of International Trade at Standard Bank Group. Until next time, goodbye.